The Philippine market going nowhere, entering into the long weekend. In contrast, the S&P 500 hitting its 40th all-time high this year. Will the troubles in France affect the US rally? Let's discuss. My name is Den Slim, and welcome to another episode of Monday Market Outlook. Alright, last week, the highlight was the CPI and inflation rate announcement in the US. US inflation went down for the second straight month to 3.3%, beating the 3.4 expectations. Now, if we look at the breakdown, it was auto insurance, rent, and housing still driving US inflation. Later in the week, manufacturing inflation was also announced, showing signs of cooling as the producer price index, which basically tracks inflation before it reaches consumers, actually declined by 0.2%, which is a significant change in direction from the 0.5% uptick last April. But the Fed had to rain on the market's parade as the FOMC remained hawkish, holding interest rates steady at 5.5%. But the dot plot showed a high likelihood of only one rate cut this year. Now, if you've been hearing the words dot plot, no, this is basically what it looks like. It's basically how each Fed member votes, and we can see here that the latest plot shows 4 Fed members in favor of keeping rates at 5.5% for the whole year of 2024, 7 Fed members opt to have 1 rate cut, and 8 Fed members wanting 2 rate cuts. But of course, the majority here only says that we will have only 1 rate cut this year. Next year, though, the Fed's dot plot is showing at least 4 rate cuts for 2025. But despite the Fed's hawkishness, the market reacted positively to the inflation and PPI data, with the 10-year yields dropping by 26 basis points while the S&P 500 surged to new highs. Back home, though, the BSP still undecided on rate cuts. First, they said they were going to cut rates after the Fed. Then they said maybe they could cut rates before the Fed cut rates. Now, we're back to cutting rates after the Fed. The latest pronouncements from Finance Chair Ralph Recto said that the BSP will most likely lower its key interest rate after the Fed. This actually caused the pesos to stabilize a bit. But, you know, is he just saying that because the last time he said we were going to cut rates before the Fed, look at what happened to the peso. So coming into the second half of June, is the May sell-off over? Apparently not. So far, 6 out of 8 trading days in June resulted into a net foreign selling of up to $55 million in foreign outflows. In a larger context though, comparing ourselves with our other Southeast Asian neighbors, we are actually seeing worse sell-off in other markets. As a result, this has pushed Philippine market valuations at very cheap levels, 11.4x compared to the 5-year average of 17.4. So as the market has been trading at extremely cheap valuations for a long time, if and when the market rallies, which stocks will probably lead the way? Now, looking at the stocks with the most favorable buy recommendations from Bloomberg, with some potential catalysts on the horizon, rate cuts, easing inflations, hopefully we could start seeing inflows into the second half of the year, and these stocks may be the ones to lead the rally. So let's look at the PSEI charts. The index back to where we started, closing the week at 6,383. But as we approach the support range here, notice the consistent wicks, a consistent rejection of the support range. So hopefully, when we open after the long weekend, we could see the PSEI reject this level again and hopefully rally back towards 6,500. Let's look at the most liked stocks list from Bloomberg and see how they are doing in a technical perspective. A-REIT moving along this range, it will probably do this until rate cuts finally happen. In the meantime, any sell-offs like this will always be good opportunities to buy A-REIT. Now, Bloom also in a range. Now, if we look at a longer term picture, it's in a range. Will it go down to 920? Or will it stay at 10 and consolidate in that area? They just opened up in Quezon City. So investors may be on a wait and see mode until their earnings report comes out in August 6. So converge, breakout from 10 pesos, resistance now becoming support. Looks like it was able to bounce off of that support. Could be a good chance to buy if it continues this rally, but I'm not a big fan of converge. FGen back to support here, could go down further to 1750 along this trend line. We'll see. Pizza, very strong technicals for pizza. This could be accumulation before the next rally. Not a very volatile stock though, and I actually prefer JFC over this, but can't deny the strong technicals so far. RLC could enter into this support range this week. We'll watch if it bounces off of this level. Now URC consolidating along 110, 105. Any dips below 105 would be good chances to buy. Note that input costs may still pressure URC's earning until the end of the year. Ali in the middle of nowhere, 29.50 could be doable, hopefully. ASEN steady at 480. Is this accumulation after the defense of the 457 zone? Could be moving up back to 509. Look at the rejection at that level. We'll see how it reacts there. JFC 219 moving along this range. Let's see how it reacts at 216. GT cap 580, waiting for it to enter into this heavily traded zone at 568. RCR, congratulations. We mentioned anytime it goes to 5 or 496 would be a good chance to buy. Breakout of this neckline here could mean a retrace back to 522, 521. Also a good chance to buy if it bounces off of that. Now Metrobank, why is Metrobank on the list despite potential rate cuts? Maybe because it's the cheapest among the big three banks. So maybe a rate cut will boost its loan growth. On to the global markets. Let's go to the S&P 500. The S&P 500 surging back to all-time highs. It is the 40th all-time high year to date. The S&P 500 on pace to have the most all-time high of any year ever. It tapped 5,449 before cooling off on Thursday and Friday, settling down into the 5,429 level. Driving the markets into all-time highs was semiconductor stocks, particularly Broadcom. Broadcom stock surging to 1,735 after it announced a 10-to-1 stock split effective on July 15. So again, we have semiconductor stocks leading the charge in this already heavily concentrated markets, where we again have a handful of stocks leading the S&P 500 higher. So let's look at the 2-hour time frame. We can see the market defying bad news so far, quickly bouncing off the 5,400 level, shrugging off the political troubles in Europe. I wouldn't mind actually for the markets to go back into this heavily traded zone, as it's currently encountering some resistance in this level. This week, not only will the Philippine markets have a shortened trading week, but the US markets will also be greeted with a shortened trading week, as Wednesday will be a holiday in the US as they celebrate Juneteenth. So maybe investors will be on a risk-off mode while they await the outcome in France. Over in Europe, the Stoxx 600 extended its losses to 2.6% since Monday, with the CAC 40 index also erasing its gains for the year off the back of Emmanuel Macron's announcement of a snap legislative election. So what happened here is that the French president dissolved the lower house of parliament, which is called the National Assembly. So he dissolved the National Assembly, and because there's no one in the National Assembly now, he has to call a snap election, which will be on June 30 and July 7, 2 days. So he has to fill in the National Assembly, and the thing here is that the rival party, which is the National Rally Party led by Marine Le Pen, has won by a majority vote, 31% versus 15%. So he is now risking that the lower house of parliament may actually come into full control by the rival party. And then the rival party here is a far right, meaning they have ideas that are leaning to the far right, meaning in terms of economics, they will usher in looser fiscal policies. Now, what does looser fiscal policy means? It means that they advocate more government spending. Now, remember, France's GDP is at 0.1% growth. So they're actually not growing, 0.1%, right? And inflation is down to a manageable 2.2%, down from the peak of 6.2%. So they are advocating for more government spending more than what they can earn. So how do you spend more than what you earn? You have to borrow. France will have to borrow money in order to finance this government spending because they want to stimulate the economy. And what happens here is that investors are fearing that this may lead into a sovereign debt crisis because it has become riskier to lend money to France. The interest rates of these loans are going up. Thus, France will have to pay more interest on these loans. And what if they default, right? So this could lead into some form of crisis later on. That's creating a bit of an overhang in the markets right now. So coming into this week, we only have a few economic indicators that will give the market some metrics to chew on as the broader story over inflation and interest rates continue to play out. And this may actually cause some sudden shifts in sentiment, depending on the results. Retail sales figures will arrive on Tuesday, followed by the S&P flash PMI numbers, which will offer insights into business conditions as investors are still looking for signs of economic weakness. Now this week, remember, we are entering into the third week options expirations week. Despite the troubles in Europe, the markets may actually see itself grinding higher towards the end of the week, because what's happening here is that the market is currently at 543, right? So as the market continues to go higher here, look at all these puts, right? So these puts will be forced to buy the underlying assets to hedge their exposure. Look at the exposure here, 2.7 versus 1.2. Of course, if you buy more of the underlying asset, this pushes the markets higher, and this could accelerate gains in the markets. Now going back to the S&P 500, right? So once the market pushes past 5,460, right? So those betting on the markets to go down may be forced to push the markets back up to 5,500. So let's see, maybe we can have more all-time highs this week for the S&P 500. But we'll see. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risks accordingly. I'll see you again next week, and I hope you have a nice long weekend. Bye-bye.